So this video is sponsored by Pionex, one of the exchanges I use all the time. It's one of the main crypto brokers to Binance, so the volume is very high. The main thing that sets them apart though is that you can use free trading bots, a variety all designed to benefit from different market behaviours, whether that's up, down or sideways. You'll get 20% off all your trading fees for life with my link in the description. And if you join the Telegram, a lot of us already use it, so if you've got questions we can try and help you out. Hello everybody, welcome back. So Bitcoin had its pullback yesterday, shocking everybody into disbelief as they expected everything to go straight to the moon. And it will go to the moon, but it doesn't, it's not going straight there, all right? So this in a way is almost like, in a bit of a way, what I thought could have happened if we broke this area. So we had this wedge formation. And when we break out of them, when we get close to the apex, I always feel like there will be a fake out move. Now, not in this case. Everybody jumped on top of it, and actually, the open interest futures, the funding rate was enormous, and it's still pretty high in all fairness. And I can see what people are up to now. I can just see it. People just too crazy, to be honest with you, too crazy with the expectation that this has to just continue to go up immediately. But actually, we can already see that, with our spinning top here, and since the spinning top, we've just gone down, down, down. Look at the candle body closures, and that's the important thing to recognize. We're looking at red, 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 red. Now we won't go red forever, but what this generally sort of suggests to me is that we're consolidating quite heavily because of the amount of futures that people keep trying to top up, and all of that is basically just allowing for further liquidations, further downtrends. I know it sounds counterintuitive, but that's the way I'm choosing to view the psychology of what's going on. People need to just have a little bit of time off from all that margin trading. There was a time and a place for it. It worked out really well. Now it's time to just relax. All right, just calm down and relax. Let the price action settle. We are in a weekend. Weekends are especially volatile anyway and unpredictable, because they are not at the mercy of traditional markets, which do play at least a subtle role in how the price action moves for crypto. So I think the inevitable areas are going to be retested again. So we're talking about 62,600 at least, which is the center of this Bollinger Band, and the 21 exponential is all around there. So we'll go down to some lower term time frames, see if there's any clues to what's going on around here. So go to the 4 hourly, below all major moving averages. In fact, we're being rejected on the 10 exponential right now, so it's not particularly a good place to be. Obviously this could bounce at any moment, but with this kind of positioning, it's still technically downtrending on a 4 hourly. It's not particularly massively overly weak or anything like that, but it could form into, I suppose, more of a downtrend, right? And my areas are going to be based on moving average largely, but there is a lot of support below us in the immediate time frames. First of all, we've got these areas we've established. Secondly, we've got 60,000, which appears to be quite strong as far as a historical support is concerned, so no big deal there. Then we've got the green 50 exponential, which is a good one, holding up at around about 58,500 or so. So there's a lot going on below us that could offer that support that would hold, right? Because we are still very bullish. This chart is extremely bullish. The market is extremely bullish. Now, there's a few things we could think about on the even lower term time frames, and again, I don't normally bring it down this low, but I suppose this is what people want, so this is what we'll do. If we look at this, it's just like any other chart, right? We're breaking down. We're breaking down below moving averages. The 200 exponential did hold for a while. That broke. Now we're below that. It's actually now a resistance. Now what we're having, not that this is anything to really go by, but it does all count for something. An incoming death cross on the 1 hourly chart. So these sort of golden crosses and death crosses, they are what they are. They're not the most powerful thing, and they're not signals in themselves. What they are is it's just saying that, okay, if we treat all of these as a directional, like an arrow pointing to where it wants to go, you want them all pointing up to start with. You also want them to be in the appropriate order, which is at the moment we're pretty much after a golden cross. Everything has been confirmed to be in the complete opposite order of how you want it to be in an uptrend. So we'll have the longest term time frames being the 200 exponential at the top, and the shortest term time frames being the 7 simple or the 10 exponential at the bottom. That's the opposite of where you want it to be. And in order for these to be flipped, they have to be broken through, as they are technically being used as resistance as they previously were used as support. You can see supports over here, supports over here. Now they're breaking down and their resistance is here. So again, this is just a 1 hourly chart. 1 hourly charts aren't really anything that I would generally trade unless I'm doing futures trading, which is far and few between, and it certainly won't be today. But this is what it means. This is what it looks like, and so it looks like the current downtrend that we're in, which is a downtrend, is strengthening until further notice on an hourly chart, right? So just the hourly. So bear that in mind. An hourly can yield, only little pieces. It's the longer term time frames that yield the larger moves. So we'll just have a look back in time. When was the last time we had one of these? We had a downtrend here, we had a death cross of the moving averages here, and we came down a little bit further to hold on the $60,000 support. So we broke down here, the death cross took place, and then from the death cross area to here, we came down at a whopping 2.5%. No big deal. So like I say, don't get too afraid of the fact that we're death crossing on hourly time frames. I'm just bringing it to your attention that it does look like that there are signs of this downtrend strengthening ever so slightly, and then we have to, in that respect, either just take some time off and just allow for this to finish. If you're a spot holder, I wouldn't get concerned at all because the overall direction is still clearly up, and this is just for those who want to know exactly what, how to treat today or the weekend in general, or going into next week. But the largest term time frames, we're talking about the weeklies, are extremely bullish. So I wouldn't be concerned at all if you're spot trading. If you are using derivatives, I'd be very careful going long or short. You'd be kind of crazy to try and short a bull market anyway. I know that it's tempting when you wake up in a day like today and go, oh, but it looks like it's going to go down. Yeah, it does look like it's going to go down, but what are you going to really get out of that? What, a 2% move at best? Do you know what I mean? Maybe you'll be lucky and we do have a further larger drop. At the end of the day, shorting is for heroes and for bear markets, not for, a weekend pastime. Anyway, that's just me warning people about the dangers of futures, because I'm not a big fan of futures really, especially for people who don't really know how to trade in the first place, or how to read charts, I suppose, appropriately, or even reasonably and responsibly, I suppose. So try to avoid shorting in a bull market anyway. But anyway, yeah, so overall it does look like it wants to come down a little bit further on the hourly, on the 4 hourly, and actually on the daily, because we have a negative cross here, diverging quite strong, actually quite steep on the MACD. And I would like to see this money flow index reach a lower low. Not that this does ever really pinpoint an absolute low. It doesn't. It can give rough ideas of where lows are forming, and this could easily be one right now. But the lower it goes, the better it will be in the long run, because we will shoot straight back up when it's time to go bullish. And if we can just pull back to 60,000, 58,000, and have a relatively low read, maybe an overextended read on the money flow index, it'll add so much more weight to when this finally turns around and pushes back up, going bullish. But for the moment, I would say take some time off, enjoy your weekend, forget about the price of Bitcoin today. It does look like it wants to come down ever so slightly. It's likely, I think, to be a boring day, to be honest with you, and maybe just a boring weekend with a bit of downtrend going on, some anemic bounces. But I can't see how this can turn around particularly fast over this weekend. I mean, obviously anything's possible. So just a quick reference of the Bitcoin dominance chart, which is also bearish, which is good for altcoins. So it does show that the altcoins are still one of the better places to buy these dips. So what I would say is that in a situation like right now, where Bitcoin dominates the market and dominates the way that the market performs, whether that's especially down, right? So if Bitcoin wants to come down a little bit, it will pull altcoins down with it. But judging by this chart, it would suggest that the altcoin dips, largely speaking, are the ones that are going to be the more profitable if they were to be bought in the first place. Yeah. So the Bitcoin dominance being bearish means that altcoins technically are stronger. That's a sweeping statement. Not all altcoins are created equal. You know that. But the ones that you follow, if you do recognize there's a nice setup or a strong uptrend, especially with a Bitcoin pair, then I think you're onto something. And it would appear that this chart will complement your analysis of whatever coin it is that you're following and trying to trade. So buying the altcoin dips is probably an educated guess as to making the best gain out of a dip that's caused by Bitcoin in the first place. Other than that, though, like I say, I'm expecting a bit of a boring weekend, and we'll do our best to do the Patreon tonight. I mean, There's no problem with it. I will be doing the Patreon live stream tonight. But if you want to bring your charts to the channel, and I'll have a look at whatever it is you want me to have a look at. Join the Patreon. There's a stream tonight, 8 o'clock, and we do them twice a week. So if you're interested in that, join the Patreon. Telegram chat is free, and there's a million other links if you want to click on those as well in the description. Hope you have a nice weekend anyway, guys. Take it easy.